In this video, traders, we're going to look at two different stock selection methods, whether we're investing or we're trading. Stay tuned. Hey guys, warm welcome to you. Thanks for tuning in. So, two different ways to select your stocks if you're trading and if you're investing. So the two different ways we have are top down and bottom up. This I'm going to look at from a fundamental and investing perspective. Then we're going to look at how exactly the same two things apply, but from a trading perspective. So top down approach. If we're investing, what's top down? Top down is basically looking at the bigger picture and then drilling all the way down until you find the stock you want. Bottom up is different. It's like looking for the stocks you want and then coming up and finding the exact trade that you want to make or investment you want to make. Things that you might look with a top down approach in the big picture are economic growth. So I'm looking at the country now. How is the country doing? I'm looking at interest rates. Are they in an upward cycle? Are they declining cycle? Where are they? Can businesses borrow money cheaply to invest and spend? Inflation, don't want to go in too high, don't want stagflation, don't want deflation. I want a nice steady rate of inflation. And bond prices, just things that we're looking at to get a pulse of the economy. And then when we get a pulse of the economy, then you go down and you say, okay, what's the sector that's outperforming? What's the sector that's performing the best? What's the stock within that sector? And then you pick your favorite stocks. Now, if you're going to use a bottom up approach, you would start off with an individual stock and you would look at a list of financial ratios like price to earnings ratio, earnings per share, all this kind of metrics that you would look from a fundamental perspective. Earnings, projected earnings, even more important than the actual earnings. How's a company going to do? And you might start off with a list of 100 or 50 stocks that you've selected, and then you want to see how which is the best one out of all that, or the best five out of all that have the best projected earnings, have the best financial ratios, the best revenue, sales growth, the best general market share or success. So you're just looking eyeballing and say, well, you know, that retailer at supermarket has got the biggest market share and they're growing. Great. So there's two completely different ways of doing it. Now, from a trading perspective, how would it work? From trading, a bottom up approach and a top down approach, if you're looking at bottom up, you're literally saying, okay, I'm going to make my trades. I'm going to look for, again, if we put this into, we compare it from investing to trading, what would you look for? It's like, oh, I want to look for my setup. It's got to be an intraday uptrend. It's got to be head and shoulders, overbought on a stochastic, all this kind of stuff. And then you make your decision based on that. Whereas a top down approach would be, okay, well, I want to look for good long positions. So I'm going to look for an uptrend on a monthly chart. I'm going to look for an uptrend on a daily chart, an hourly chart. Maybe I look for a downtrend on a 15 because I want to try and buy a pullback. Then I'm going to look at a 5 minute for my entry and try and find a long entry based on support after a good move to the downside 180R or whatever that may be. And this, I think, from a trading perspective, from an investing perspective, it's obviously up to you entirely how you want to do it, because there's two different approaches and there's no wrong or right way with that. But for trading, a top-down approach I think is generally better because it filters out stuff that you don't want to do. So if you're trading and saying, okay, I want to align myself with the long side, I'm looking to buy long, good stocks, I want to buy long, I'll go long, should I say, then just buying stuff is already in an uptrend is a good filter. It means that you've got the wind behind you. You don't have to try and be ultra clever and find little nuances and go with the bottom up and say this and that and the other. Now, bottom up works if you've got a basket of stocks or a basket of markets that are your babies. You know inside and out. They're your children. You know how they trade. You know the nuances. You don't then need to do the top-down approach. Top-down approach is when you're going into a fresh market, you've got fresh ideas, and you'll become a specialist based on strategy. If you're a specialist based on strategy, i.e. buying a pullback in a bull market, then you need a bull market, you go down, you find the best candidate. If you're a specialist based on market, then you use this because you've already got the list that you want, and then you're just scanning it saying, okay, setup, where's my setup? What's the best trade here? Is it long, is it short? And you're just using it a different way. So two different ways of doing it, two different kind of investing and two different time frames as well, investing and trading. There's no right or wrong way. Like I say, I prefer doing the top-down approach if I'm looking at it from a setup perspective, but happy to do bottom-up approach from a trading perspective if I am more looking to be in tune with specific markets. And then investing, this is kind of mutual fund, hedge fund ways. They'll look for a country that's got the right ticks in these boxes, give those ticks, then they'll go down and they'll look at the sector that's performing the best, and they'll go down and look at the stock, as opposed to kind of bottom up, which you think about it, if you've got the whole universe of stocks in the entire world, that's going to take you an awful long time to do. And you might not get a good understanding as well of having where the big money is flowing, where the tide is flowing, because the tide is what rises, lifts all ships. So even if you're kind of wrong with your stock picking, if that's right and there's good economic growth, you're going to see some uplift in your investments anyway. All right, guys, 2 different methods for stock selection: bottom up, top down. Take care. See you next one. Bye-bye.